Ladies and gentlemen of the crypto space, it's always a pleasure. Give me 2 seconds. Let me make sure my microphone is properly configured. Sorry, should have done this before. Oh, that's why. USB audio device. There we go. There we go. Noah Check in the house. Welcome, everybody. Let's see what's going on. Today's episode is sponsored by Change Angel, non-custodial swap exchange. Input, output, put in crypto, get out crypto, no deposits, no withdrawals. They got awesome assets. That's the way to do things. Stop swapping on exchanges. An exchange is for trading. So unless you're like going in and out, and if you're dollar cost averaging, if you're accumulating, there's an exchange is useless, and there's way too much risk to keep your coins on an exchange. We've seen what happens. So that's my DeFi, my Change Angel spiel. Not your coins, not your crypto. Hold on, 2 seconds, guys. All right, who's in the house? We got Iran, we got Barry. Always a pleasure. Let's pop it over to the main screen and let's get this party started. Today's episode, we're talking about how to measure your gains, Bitcoin or dollars. Why are we going to talk about this? Because, first off, we just came off months of absolutely insane DeFi madness. Now, I know there's a lot of new entrants to the place, and a lot of people don't know that the last 5 months was basically 2017. It was basically a crazy crypto experience where assets were up hundreds of percent. And this ended basically September, and we're in October. And what folks that are just getting into crypto right now are seeing is basically like DeFi and these clones and new things that are trying to barely keep that food craze alive. And obviously, new folks aren't going to really understand what the heck I just said. But if you go to like seal.finance or what is it, Pickle is still around. These are the most experimental of crypto projects. Pickle.finance, Pickle, is a good example. Seal.finance is another example of two of these, what I would call monetary experiments. Now, interestingly enough, there is merit to them. Would I participate in them? No. But there's merit in them from an experimental standpoint, definitely from a psychological standpoint, convincing people to actually participate in them vis-a-vis incentive programs. And what they are is basically psychological plays to encourage people to lock supply and disrupt supply. And there's a disincentive to take value out because you have to pay a fee. I believe Seal has like a certain amount of fee just to take your value out. So there's all this incentive to keep it in, and because of that, they're able to generate these returns, and the system doesn't hyperinflate at warp speed. So if these were the normal returns on the normal monetary policy and strategic incentivized supply disruption strategies, this would self implode really quickly. But that's about it. That's what I would say these types of projects are. They are not what this year started as. This year started as like the core stuff, like Aave was on fire, Compound was on fire, and then when the governance tokens hit, when Comp came out, everything just exploded into an awesome DeFi extravaganza, and that is done. So for new folks getting in, we had an event for basically the summer where really incredible projects were establishing themselves and solidifying their existence, not just for now, into the future. Some of them are basically positioned to disrupt the legacy banking system, which is exactly what Aave is doing left and right. And if you follow them on Twitter, you'll see that they're getting funding. They just did their Aave from Lend token swap. They just basically launched their DAO, and people can vote, and the governance is live. And they have their security module. So they have a way, they have basically a self-insurance program that is incentivized. I mean, just everything about the way Aave is crafted is just one of the most spectacular platforms that has emerged in a long time. And this is all this year. What happens in crypto happens at warp speed. This is the most incredible rate of progress that I've ever seen for projects and technology. Because it's not just a project that got off the ground. You got governments and game theory and tokenomics and monetary policy and literally just the DApp, their website design, and so there's art involved in that and UX, and then there's business and legal. Incredible the rate of progress that's going, and absolutely incredible. Um, Yeah, always a pleasure, Pete. Thank you. Comment anytime. You have any questions. If anyone on the stream has any questions about anything, the other day I asked new folks, new people that are getting involved with crypto to join me and ask anything. We don't have to talk about sophisticated topics. We can talk about the simple stuff. And that's partly the reason why today's topic is titled, Do We Want to Take Our Gains in Bitcoin and Dollars? In Bitcoin or dollars, because we don't just talk about crypto, we talk about finances, we talk about the global financial system, we talk about the stock market, what the Fed is doing, what the Treasury is doing, because it's all related. If you want to understand why crypto is probably the best investment of a lifetime, you have to understand why the Federal Reserve and the Treasury are systematically destroying the value of the dollar, like proactively, actively, and Congress is completely complicit in the process that they're executing. In fact, Congress has authorized the printing of trillions of dollars to systematically devalue the dollar because there's significance in a cheaper, less valuable dollar as compared to other fiat in the world. It puts the U.S. in a very different strategic position with regard to manufacturing and exports, and the balance of exports and deficits, trade deficits. And that's really what it comes down to. And Lynn Alden talks about this wonderfully. And and Brent Johnson talks about how the most valuable or the most meaningful means of value preservation in the legacy financial system is the assets of the United States. So he gives a great explanation of why the stock market should go up another 3, 4, 5x, or the dollar should actually go up very meaningful percentage points, if not double-digit percentage points, or whatever he has in mind. But because the dollar is the best fiat of it's the best of the worst, and the United States stock market has incredible companies. But what has happened because of the Federal Reserve and the Treasury's action, everything has become distorted. Nothing is real. This is all fantasy land. It's all like hysteria. It's all just so many regards people's like imagination of the way stocks are valued, or just normal behavior for banks, that banks don't have any reserves whatsoever. This is all just an extraordinary time in all regards. If you're looking at crypto, the incredible rates of progress. If you're looking at the government and what Congress is doing, it's just this has never happened before. And you could say that like every year, like every incredible meltdown of the U.S. government that we basically have every 10 years at this point is something new and it's never happened before. But you got to think at some point there has to be some real significant systemic change, because what they've done overwhelmingly for the last many crises, not just 2008, is a big fat kick the can down the road. So how far can you kick the can down the road? And that's what the biggest brains in the room are trying to understand. That's what Raoul Pal is trying to understand. How far can they kick the can before 0% interest rates by the Federal Reserve triggers some serious systemic dysfunction, where the flow of money just becomes not just abnormal, but destabilizes, and the value of the dollar becomes or the meaning of the dollar, the usefulness of the dollar, and just the geopolitical complexities encourages not the the non-use of the dollar that we're accustomed to. Then the world changes. If the US dollar isn't the centerpiece for global finance and global trade, everything changes with regard to the way the US operates. Now if we're less strong. We're on the defensive. We are not. If a country that used to use the dollar is no longer dependent on the dollar, we no longer have control over that country. They no longer uh, have to comply with maybe our financial or banking laws and banking. That's exactly what Iran just did. They ditched the dollar, and if you ditch the dollar, you no longer have any necessity to comply with the U.S. banking system. How about that? So that's crazy, and this is real what's going on. Iran says, "Hi Noah, how do you include crypto in your will?" Yeah, this is getting complicated. So there is no way to do it. The closest person I would say to look to is probably like Pomp. He probably has thought of these things. Now, no doubt, I've thought of these things, but a will is a piece of paper that's held by an attorney that is informed about your passing, and the attorney has a piece of paper that says he has privilege and permission to finish your wishes. That's the whole point of a will. So, what the hell does that mean? Are you really going to put your keys, your private keys, in a will and give it to an attorney? So, these are very meaningful philosophical concepts that you're heading down the road of considering. What does it mean to pass on value and crypto value? And it's what is value? And that's why we're talking about like Bitcoin. Do you take gains in Bitcoin or do you take gains in the dollar? So what is value? Which more do you value? Do you value the dollar? Do you really value the dollar? Or do you value Bitcoin more, or at least not the dollar? So that's my position that I strongly advocate. Value anything but the dollar, because to me the dollar is the least valuable of anything. Nobody wants to hold the dollar. Everyone wants to spend the dollar. So if you go into a store, well, here's a great example of why the dollar is just garbage. If you go into a store, you go into Best Buy and you see something really cool. You see like a brand new computer. Let's say you see a MacBook, and you're like, "Whoa, I want that MacBook." What's the first thing you think about giving them for that MacBook? The first thing you think about giving them is dollars, because you're like, "I want that MacBook more than I want these dollars." That's how worthless dollars are. So back earlier in this century, that's not the way it was. It was very valuable to have dollars. You actually got a meaningful interest rate in the bank. Now, if the bank was giving you 3, 4, 5, 10% on your money per year, it's very meaningful to accumulate dollars. If you have 100 grand, you have $110,000 next year. If you have $1 million, you got $100,000 from the bank if you were getting 10% interest. So you are very much encouraged to not spend those dollars on an item. So the fact that there's 0% interest, you are actually proactively encouraged to not hold dollars, to get rid of them, use them, and trade them for basically anything, because there is absolutely no point and no value to keep them. You're not getting anything for them. In fact, even worse, because of inflation, you are literally losing value merely holding dollars. So it's actually just horrible. The dollar is the worst and last thing you could ever want to hold. You are literally losing value just holding dollars. How about that? If that blows your mind. So the other thing that that is closely related to like wills that you're thinking about, Iran, is like IRAs. Now there's self-directed IRAs. Look up a self-directed IRA if you're interested in cryptocurrencies with being held in an IRA, which is a tax structured account, whether I believe you could at least do a regular IRA, if not a Roth IRA. That would be really cool because Roth IRAs are absolutely incredible. Everyone should have a Roth IRA, specifically with regard to anyone that's subject to UX tax laws. You should have a Roth IRA for retirement purposes. Now, the question of what the heck you put in these IRAs is pretty much the topic of conversation that I love to talk about on the stream, and that I talk about on Twitter all the time. And folks know where the way I lean, and I basically lean towards anything but dollars. The dollar's the worst thing to hold. And I just gave a wonderful example of why, because the first thing you think of to trade for anything is a dollar. If you have a stock, do you want to trade that for dinner? You go to McDonald's, would you want to pay with a stock? No, you're going to pay with some stupid dollars because you're like, oh, they're just stupid dollars. And you're going to get more because you're going to work and they're going to give you more. So the stock's more valuable. Even bonds and treasuries are probably more valuable. And clearly, cryptocurrency is more valuable. Does anyone really pay for anything using cryptocurrencies? No, because they're more valuable than dollars, because they have a higher likelihood of appreciating than dollars. And that's why we're on this stream, to distinguish between real, substantial, substantive, established, entrenched cryptocurrency projects, where the asset, be it a UTXO asset, if it's its own blockchain, or an ERC20, if it's on Ethereum, or an 1177, I believe. Let's look that up real quick. ERC11, I believe it's 1177. ERC11, no. ERC20 with arbitrary data payload. This is what I got to remember this. Oh, what is it? It's done by Link though. 6.7. Is it 6.7? What was I thinking of? 1177. The CRC 677. Yeah, contains a data payload. So this is really cool, guys, and this is why Ren is so hot, because the ERC 677 standard is how you're gonna have like cross-platform uh, or NFTs, or this is really like a Digi assets where there's metadata associated with the UTXO asset, and this is how you're able to maintain that metadata in a tokenized representation of that asset. Is it would be using the 677 payload. That's really cool. I was looking at this the other day, and nobody's really using the 677 standard other than Link. Absolutely meaningful. Stelios is in the house. Year-end Roth IRA is the way to go. Yeah. But no doubt, there's advantages to a regular IRA as well. Carol, my man. Always a pleasure, brother. Mock in the house. Igor, deflation equals power. So deflation, if you think about it from a fiat perspective, is actually bad. If you have so deflation is very relative. It's a very misused terminology. If you have inflation in the price of food, that kind of sucks. It costs more money to buy food. If you have deflation, that's cool. If you have inflation in so it's relative. Inflation in the quantity of dollars, that means the value of dollars is being depreciated, and that's pretty bad. But it also, on the contrary, if you have deflation, that's pretty much going to destabilize the planet, because then the dollar gets too strong, and it's really going to, and that's what Brent Johnson says, the dollar is going to eat the world. Everyone's going to want to buy the dollar because the dollar is deflating. All the value is going into the dollar because it's the best of the worst garbage fiat, because all fiat goes to zero eventually. Anyway, Stelio says, should I buy Curve now for the 2.5x boost? So I don't know. I can't answer that, meaning I don't even know why I bought it. The point being is sometimes we don't know why we do things or if it's the best time, and that's where speculation comes in. If you buy in Bitcoin, you're talking about the least speculative investment, because we know that big macro thinkers, traditional finance persons and companies and organizations are incorporating Bitcoin into that narrative. So it is the least speculative of crypto value allocations. But if you're talking about like an altcoin, or dare I say a new DeFi protocol, or an AMM like Curve, it's a relatively speculative investment. So the point I'm trying to make, Stelios, with regard to when should we get it, I don't know. Let's take a look at the Curve chart. So data helps us make these types of decisions. So Curve, obviously, we know has been on a steep decline. It looks like it's been trading horizontal. So I did point out yesterday that we've had this very interesting series of touch points from its falling wedge exit. Well, this is encouraging because this is a bit of horizontal action coming off which was pretty much downward action for a long time. So if you want to be conservative and have less risk, I'd wait longer. I'd wait for something along these lines. Um, and then I'd wait for maybe even some upward action. If you get it, what, at 750, and you wait for it to go up to here, and maybe here, and then it hits down again. Um, so look, maybe you could even find like a previous break. Like these are breakouts. So let's do this. Watch this. A horizontal line. So there's some serious resistance. There's some serious resistance here. Horizontal line, some serious resistance on a breakout. So, and if you could go like this, so this is how you would minimize your risk taking a position if you're worried about like 10 grand turning into 5. And I'll explain. There's more to Curve than just 10 to 5. So it goes up, it goes up, it goes up, it goes up, it comes down, and then it bounces off this line. So this is what's called confluence. Um, is a piece of data that suggests strength, that suggests that there's further upside and there's risk minimized downside potential because it has turned a previous resistance into now support. So think about Curve as I've been accumulating on the way down. And we could take a look at Curve, why I'm accumulating on the way down. So I moved. Nope, I'm in the Dow. 1 second. How much time do we have? We got about 8 minutes left. Let's take a look. So I moved about 14,000 into Curve, and at one point it was 100%. This was putting out $14,000 a year, and now it's down to 6,000. But here's the thing: so I put in that amount of money, and from a CRV perspective, you would look at it and say, I have lost over half my money, over 50%. My $14,000 is now worth $6,000. But that's not the way I look at it. I look at it that I put in $14,000 and I'm getting $6,000 per year. What does your bank give you? If you put $14,000 into a bank, your bank's going to give you 0.02% interest, which is probably about $1. Your bank will give you $1. So I put in $14,000 speculating that I'm going to get greater than percentage points, 5%, 10%. Oh my God, the returns, the APY right there is crazy. That's a huge APY. This is double digit. This is 30%, this is 35, 40%, give or take, whatever. Point being, where does this money come from? This value comes from the daily volume. So this is very much a sustainable ROI, a sustainable APY. So people were looking at this and very upset that they turned 10,000 into 5,000 or whatever. Even if they bought it up here, my goodness, you could easily have turned $10,000 into $1,000. Oh, this chart's been horrible. But what's most pertinent that folks are not seeing is it's not the curve that's valuable. What's valuable is the curve allows you to mint VE curve, which entitles you to a portion of the trading fees on the daily volume of transactions. $53 million a day, and there's 0.02% of a trading fee that goes to Curve VECRV holders. Doesn't that mean you want to own as much VECRV as possible? Because you're gonna be entitled to a portion of the trading fees for a platform that's currently in a duopoly with Uniswap. While that loads, let's look at the stream. Well, XDAI is using ERC 677 also. Good call, Pellets. Good call. So Curve and Uniswap are a duopoly. So you're talking. This is just incredible. I want to own I own a portion of Curve's trading fees. Could you imagine? Here's the speculation that I get excited about. Could you imagine if the trading fees were $500 million a day? If this was 500 and my yearly earnings went to $60,000, or if this was $1 billion and this was said $120,000 a year, which I was able to purchase for a 14 chip, getting $120,000 a year from trading fees. So clearly there's going to be more incentive to lock CRV. So at that time, this is going to go up substantially. If Curve, the volume on the AMM exchange goes up substantially, the value of Curve will go up because the APY for VECRV holders will produce proportionally more revenue. So people that you see on Twitter angry that this price is going down have not looked into the subtle and sophisticated complexities of the game theory that Curve has implemented. Absolutely fascinating. So you don't see it on the surface, but it's there. So Pella says put in Bitcoin. So I have a little bit of Bitcoin in my a little bit. So folks on older streams know. Um, I have my Bitcoin in the Ren pool, earning 16.76%. Anyway, so that's Curve. That's Curve. Curve's a good deal. I've talked about it. I would say gold is less speculative than Bitcoin right now. Yes, but some say gold is very susceptible to geopolitical complexities, and that's clearly exactly what's going on. Now, Bitcoin is probably going to get intertwined with geopolitical complexities at some point. I mean, what isn't intertwined with geopolitical complexities? So the point being, I don't really know what is risk off. Is there such thing as a risk off store of value? Probably not. So, that's why we talk about the things we talk about, to try and figure out what to do with our value, to protect our value, to do the best possible thing we can do with our value. Because this is not an easy answer. This is not an easy question to even contemplate to try and come to, hopefully, not a bad answer. Some tough choices out there, ladies and gentlemen, and that's why we talk on this stream. If you couldn't own a dark node, would still have bought as much Ren? I don't know. I got into those dark nodes extremely early, so I don't know. I don't know. My goal as when I started this stream was return on investment, APY, because everyone's goal for retirement is where money works for you, where you don't have to work and your money produces what you're. Let's say you make 50 grand working. If you had a certain amount of money invested that's producing 50,000 a year, you don't have to work. You could work and do the things you want, but you no longer have the burden of needing to work. And that's such a powerful psychological achievement that so few people have achieved. But you don't need to work, but you choose to work because you want to work, but you don't need to work. That changes everything, ladies and gentlemen. Yeah, by locking Stelios. You go right here. You go to the DAO. You take CRV, and you go to the locker, and you lock your Curve. And you're going to want to lock. So here's the kicker. If you lock it, you can lock it for different periods of time. So all of my Curve is locked for 4 years. So if you lock your Curve for 4 years, you get a 1-to-1. 1 CRV equals 1 VECRV. If you lock it for shorter periods of time, you get less proportionality. Hence, there is incentivized long-term supply disruption. I don't think this is going to be down here for that long, guys. If there's any movement in the crypto space, there's any hotness in the DeFi space, uh, there's going to be an increase in the volume on the exchange. And they're in a duopoly with Uniswap. Duopolies, anytime there's a front runner or first out of the gate systemic disruption, they're very hard to disrupt, if ever, unless there's overwhelmingly a superior technology. So that's why. Look at even the technical indicators. So I'm giving you guys fundamental reasons why there's good confluence. This is a good speculative bet. So you all have to come to your own decisions and look at all of these pieces of confluence, the fundamental data, the technical data, because there's only two directions value goes. It either goes up or it goes down. And what we want to do is have enough data to suggest that the value we're allocating is more likely to go up than down, more likely to appreciate than depreciate, more likely to outperform than underperform, and more likely to produce a return on investment, an APY, which is compounding, and that's even better. And then not only is your investment potentially appreciating, it's also working for you, producing a continual return on investment. And that's absolutely incredible. And that's when everything changes. And that's potentially and hopefully when your perspective on things changes, perspective on work, and what is the purpose and meaning of daily activity, and gets quite philosophical. You guys can imagine how my brain goes. Yeah, I could sell fake gold all day, my man. Yeah. So pellets, yeah. So there you go. So now that's an interesting one. So I keep Uni up here. So if Uniswap does add a trading fee to their governance, and governance approves a portion of the trading fee going to unit holders, now you're talking pellets. But bear in mind, I invest based on today. So I don't like investing based on what may be. That's how you get max speculative. We don't know if that's going to happen. We don't know how the market's going to respond when Cardano launches their smart contracts. I am excited and I very much look forward to the smart contracts getting launched. Now, the major narrative that persons are going by investing now is that when the smart contracts are launched, there's a massive shift of TVL and developer activity. Right now, there's over $10 billion locked in Ethereum DeFi. Now, if $1 billion gets locked in Cardano DeFi and there's 10% of the developer activity on Ethereum, now your speculative risk has decreased, and now there's traction. But as of right now, there's no developer activity and $0 locked. So it's max speculative. My recommendation always is to minimize risk, eliminate risk. Don't speculate. You work too damn hard for your money. Stop gambling. Work on the information that is now, not what is. There's wonderful investments based on the information that is now, looking for the little circles on the damn chart for the confluence about now. Not betting on what may be, bet on what's now, bet on the data you have. And that way you make good decisions that are more likely than less likely to play out. And that is how you grow wealth, that is how you protect gains, and that is how you frickin' win. I'm in this for winning, boys and girls. Everything that I say to you guys is because I'm thinking about it for me. You guys all help me better understand my strategy and the choices and the decisions that I make for myself and my family. So I thank everyone for listening to me and letting me speak my ideas. Um, but Christian says, what is your opinion of Plan B's BTC stock to flow? No, unfortunately, it's not applicable to Digibyte at all because stock to flow and Bitcoin fit into the global macro financial narrative. And Bitcoin is on the minds of every major corporation on the planet and likely governments at this point. And Bitcoin is effectively part of the global financial system, and that is why the stock to flow is overwhelmingly applicable. It is overwhelmingly a narrative comparable to gold. It's a narrative as a treasury, a reserve asset for companies as well as likely countries at some point. Everything else is speculative. It's basically trading and futures and nobody in the investment space outside of us in crypto and like DeFi and crypto exchanges, from institutional space, from pension funds, nobody's looking at altcoins. They're not looking at altcoins. They're looking at places to park $500 billion, 500, a couple hundred million. You can't park that kind of money. You could barely park that money in Bitcoin. You can barely park that money in Bitcoin. So from a big boy, big financial, big macro perspective, only Bitcoin is on the radar of the big money. So that is meaningful. That means from our little puzzle pieces, our little confluence indicators that give us more likelihood than less likelihood, Bitcoin is a relatively risk off crypto position. So we're going to wrap up the stream that um, what do we accumulate our value in, either dollars or Bitcoin? I would argue that there's more confluence suggesting it is a better financial decision to accumulate Bitcoin than it is dollars because of all the little confluence indicators that we talk about. And this isn't a recommendation. This is merely me just pointing out all the confluence, suggesting that dollars are losing value every single second of every single day. And Bitcoin is actually on the radar of every corporation and likely many countries around the world as a treasury reserve asset that has monetary properties stronger than gold, as described pretty much in the Bitcoin stock to flow model. So I accumulate denominated in terms of Bitcoin. Always a pleasure. Thank you, Stelios Reserved. Pellets, my guys and gals, it's always a pleasure. 12:06 p.m. on a Monday, October 12th. So that's about it for today. So tomorrow we're going to have another hot topic. Smack those thumbs up buttons. Tell everyone to subscribe. And as always, I thank everyone for listening to my ideas. You make it better for me, and I hope I make it better for you. You all have a wonderful day. I'll talk to you tomorrow. Peace.